All right, we are here with Lucas Boyd of Boyd, Shackelford, Barnett, and Dixon. Lucas is a partner, president, and one of the founding members of Boyd, Shackelford, Barnett, and Dixon, an insurance advisory company that provides corporate insurance to fields such as construction, oil and gas, restaurant, and property, along with home and auto. He's been in the insurance business for over 15 years and looks to bring a better policyholder experience for his clients. Lucas, what's happening, man?
This is it.
This is it.
This is it. That's a better intro than I typically get.
Oh, yeah? Yeah.
We can say BSBD. That's probably a little less of a mouthful.
It is. But I want to give credit. Like when you're a named partner or whatnot, like that matters, right? Yeah. And so, I used to watch
those people.
To those people, sure. Yeah, right. I used to watch a show called Suits, and I don't know if you ever saw it or not, but it was like, oh, make me named partner, and that was like a huge deal. And so, I want to give credit to old Dixon, who I think was just added. Is that
about probably 2 years ago? Kyle is a heavy equity guy in our firm, and young guy is going to be. He and I are going to be partners for a long time. So he's just kind of doing everything right. So we wanted to stick his name on there too. So
yeah, that's awesome. So. Been in the insurance business for 15 years. Tell me a little bit how you got started and kind of where you started after school, after college. Went to Mississippi State, played golf there.
Went to Ole Miss.
Met the Ole Miss, which is a big
keep
difference.
That on there.
Which is a big mess up right there.
Yeah. Well, you went to Texas, right? I mean,
no. Yeah, I know. Exactly. A&M, but I get you. Yeah, I love that. No, so went to Ole Miss, played golf there, and then after graduating, got into the insurance business. Kind of kicked me off right there.
Yeah, and you probably don't remember this, but so my father and my oldest brother have been insurance guys. My father was involved in an agency in Garland called the PV Insurance Agency. It was one of the 2 or 3 bigger agencies, independent agencies in Garland growing up. And in 2006, he and one of his old partners, Tim Shackelford, they broke off and started an agency in Garland, which is when I, a couple years after that, broke off from my previous employer and came to work for them. But so I was one of the very few kids in college that was going to go into insurance.
You knew what you were getting into.
Yeah, and what my father had given me was he showed me that it was a good profession that was pretty sustainable, something that's going to stick around for a long time, and you can do things the right way and make a decent living too. And so that was a good example. My oldest brother Derek is 7.5 years older than me, and he got into insurance after he graduated from Baylor in '93. And so I saw him do it too, and I figured, well, if those guys can do it, maybe I can as well. And quite honestly, it's the best decision I ever made because I had a lot of buddies going to do other things, and I didn't know what I didn't know, and so I got into insurance a little blindly, and it's been great. It's an evolving industry, one that was in need of young people like myself. Mm-hmm. It's an aging industry, and so there's a lot of opportunity for somebody like me.
We might touch base on that really and dive a little bit deeper as far as one, the legacy and how you went into Boyd with your father essentially, and then talk about how it's transitioned the business, kind of like real estate in a way, from a standpoint of, man, there's a lot of people that did things an old way, and now there's some young, fresh blood coming in and kind of changing the game a little bit. Mm-hmm. Mine, from a standpoint of commission base, yours, I don't know if that's as affected as mine is or not, but we can touch base on that a little bit. But I want to give people, before we dive into your business side and how you built your business, I want to dive into like just some tips for people, right? Like people, new homeowners, because in being in real estate sales, every deal that I do, you have home insurance involved, right? Mm-hmm. More so the lender deals with that than I do, but there's definitely discussions between my client and myself about what insurance company is good, bad, brokerage, not brokerage, whatnot. Right. And so tell me about some tips, like just some very surface level. We don't even have to go too in depth right now. We'll get to that more in depth here in a second, but like some surface level difference between brokerages and your in-house State Farms, what all state companies like. And this isn't because I know you're a brokerage, right? So this isn't a bash session on any of that, and I wouldn't expect it to be, but just some pluses and minuses of either one, maybe.
Yeah, so typically when you talk about a direct writer or a captive, somebody like State Farm or Allstate, they represent one company. Mm-hmm. Good companies that do a good job from a service standpoint typically. There's always those cases where folks didn't get taken care of and whatnot, but those companies are built on volume. They want to do as many deals as they can. Personal lines, typically the commissions are a little bit lower, so you want to do as many deals as possible, right?
Yeah.
Most of them do a good job of that. Most of them are serviced outside of the agency, so you might have a guy or a girl that you go into and buy a policy from, but from a service standpoint, they could be outsourced maybe to another country, and they represent one company. So we're a independent brokerage, meaning we represent multiple regional and national insurance companies, and they all do things a little differently, but we want to be the center point for all of our insurance clients, whether that's personal lines, commercial, benefits, that sort of thing. So when you have a claim, typically you're gonna call me or somebody in our office, and
right.
We don't mind being a local agent that you can see, touch, and feel.
Right.
I think that's really important. We're not a volume game type of shop. Mm-hmm. Most of the independents are a little more what I would call private client.
Right.
Which is we do business with the people that want to do business with us, that understand our model and are a good candidate for that model. And that model is trusting your advisor to help you make good decisions. The first thing that I'll ask somebody if you or somebody else referred me a deal is this a price-driven deal?
Right.
If it is, then they're probably talking to the wrong guy.
Right.
Because it's not just about price. There's a lot of variables, a lot of coverage forms that are somewhat complex that you might not see on the front end. But you asked about tips and
well, real quick before we get that, because you said advisor, right? And I noticed on your website, y'all call yourselves advisors versus agents, and you might call yourself an insurance agent as well. Mm-hmm. But is that purposeful?
Absolutely.
Like, did y'all come up with, hey, we're going to be advisors, we're not going to be just agent, because agent implies like, hey, I just want to get your money. And
so there's a couple things there. Advisor, we want to be more consultative. Mm-hmm. You'll see us talk about more than a policy. You're a partner.
Right.
We want it to feel like a partnership, and that sounds kind of cheesy, but it's really the truth. To me, insurance agent is a little outdated.
Right.
It's also a little small time sounding.
Sure.
Since we do a lot of commercial brokerage, mm-hmm. We want to have the image and the reputation of people that can handle big deals too. Not just your local insurance agent. We can do that,
right?
And we do it pretty well, but we don't want to limit ourselves because we have a lot of talented people in our office that do far more than just that. So an advisor or a partner, that's a little more of a consultative term, and that's what we want to be viewed as. We don't want to be the cheapest price. If we are, that's great.
Yeah, right.
But I'll have that conversation on the front end about what are you really looking for, and I might even refer them to somebody else if they don't fit what we're really looking for too. So.
Yeah, is that something that you come across when you're dealing with corporate versus homeowners? Like, are homeowners more price driven than your corporate clients?
I would say that everybody's price driven.
Sure.
To a point.
Right, but you asked that question for a reason, right? I mean, because there are people that it does matter for, hey, if it's $20 extra a month, I'm talking homeowners, like they're going to go somewhere else. Yeah. But then there's also the people that it's $50 more, and they're like, dude, I know I can pick up the phone and call, and it's
hit or miss. I have clients that spend a lot more money with me knowing that I'm going to pick up the phone when they call. Yeah. And then you'll find somebody that might even be really wealthy, and if it's $80 more, they're not going with you. We've seen that too, and I've done probably a better job of having that conversation on the front end. Outlining expectations. What are you looking for? Are you looking for a broker, or are you looking for a policy?
Right.
Right. If you're looking for a policy and a price, then BSBD is probably not a great fit.
Right.
And that's okay. And I think people appreciate that. I don't want to waste their time, but I don't want us to waste our time either.
Right.
So it's a little bit of a marriage. You know, you want to date a little bit. You want to understand what your expectations are. We have a number of claim scenarios where people have referred us business because of our model. One of my close buddies actually had a house fire, and they're going to end up making this thing a total loss, and they're going to demo their home. And I've gotten a couple referrals out of that,
Right.
because people have asked him about his insurance experience.
How'd that go? Yeah.
And he'll tell them, hey, listen, I've had opportunities to save money, even with Lucas, with me. But the way he buys insurance is, Lucas, what do you think?
Yeah.
You know, where am I going to be taken care of? And I think he saw that. We placed him with a carrier a number of years ago that's come in and taken a really tough experience and left him with a pretty good taste in his mouth and how it was handled, and that sort of thing. So, you know, insurance doesn't matter to a lot of people until they need it.
Yeah.
And that's why I think it's important to set expectations on the front end.
So on that house fire example, kind of getting back to that,
Yeah.
you know, the replacement value and stuff like that, I'm sure is one of those keys to look at,
Yeah,
right? I was surprised up until literally we bought this house that we moved into 2 months ago that I hadn't paid as much attention to house replacement value, and correct me if I'm wrong, if I'm using the wrong terms, but replacement value versus
Actual cash value.
Value, right? And so even though you pay whatever $500,000 for a house, you don't necessarily need $500,000 in replacement value because the land's worth something, and theoretically the land is going to be there. Is that? I mean,
Yeah.
I mean, so tell me, expand on that.
Yeah,
a little bit.
that's a common mistake.
Okay.
Your thought right there, and I'll tell you why. I don't want to get too into the weeds. A lot of people call and say, "Well, I just bought this house for $500,000, so make it $500,000."
Yeah.
The land does come into play, but also I'll go back to that claim scenario where they had let's say about a $500,000 house, and it was about a $300,000 loss.
Yeah.
So on paper, it looked like $300,000, but they had
hold on, because help me walk through this. It was a $300,000 loss, meaning like that was the replacement cost of the house.
Yeah, that's what they thought maybe they could come and fix the house up for.
Okay, gotcha.
But they ended up replacing the entire house, and they're going to demo this thing because there's a lot more to it than just what I paid for it,
Yeah,
or
exactly.
what I pay taxes on. A lot of people look at the appraisal that they got from an independent appraiser when they bought the home, or they look at the tax appraisal on the CAD, or they just say, this is what I paid for it, or this is what the bank's requiring me. First off, most of these insurance companies have their own replacement cost estimators.
Yeah, right.
So you don't. This isn't a negotiation.
Right.
I paid $500, but Safeco wants to do it for $580. There's not a back and forth. They say,
there's
no,
not. You can't.
Typically, there's not.
Okay.
Typically, there's not, especially in the higher end, like high net worth type spaces. The insurance companies have done this a lot more than the buyer, typically, and so they know what claims look like. They know what a claim's gonna cost them.
Right.
And so, a lot of folks will call and say, "Hey, I bought this house for $500,000. I only have a $400,000 note on it, and the land's worth $100,000. So give me a $400,000 policy." And they're going to be disappointed when we send them something that shows a limit of $625,000 because you think about building the house, but you don't think about in this scenario, you've got contractors out there that are doing a lot of site cleanup, then they're going to do demo, then they're going to site cleanup again, then they're going to have grading and landscaping and surveying and all kinds of stuff that goes into it that's not actually part of the home itself.
Right.
So there's a lot more to that choosing your limit than people realize. Typically, you want to trust your advisor to put you in the right spot. But a helpful tip maybe is looking at price, and that's obviously an important piece of it. Making sure that it's insured properly from a limit standpoint, and then really understanding your deductible structure.
Yeah.
Deductibles are big, obviously, in North Texas. You've got a lot of hail. Typically, there's a separate wind and hail deductible that folks sometimes don't really understand. They get a cheap deal on the front end and didn't realize the insurance company gave them a higher deductible than they really wanted.
Right.
And most of the time they don't understand that until they have a claim.
Right. Right. Well, because I'll be honest, that packet is sent out, and it's a lot to read through, man.
Yeah, it's a lot. Oh, it can be a couple hundred pages.
Yeah,
sometimes.
I know. And so you're like, dang, okay. But that's why I want you to talk about, okay, what do I need to look at? I know there's a one sheet, right? Or maybe two sheets where it's like, okay, this is your deductible for this, deductible for that, maybe a hot sheet type thing. But it can be overwhelming. And
it is, and that's why you need an advisor or an agent or a broker that you trust.
That you feel like is on your side.
Because you don't want to go through 200 pages of policy, and you're probably not going to understand the majority of the lawyer speak anyway.
Right.
So you gotta, just like being a real estate guy, I'm not going to go buy a house on my own because it's not my world.
Yeah, right.
And I'm too cautious to go make a mistake on a big investment. A home or a car is a huge investment for you, and it's unfortunate. Sometimes people will make a decision based on a TV commercial or a guy's voice or a lady that wears an apron. And they come to us typically after they've had a bad experience from not necessarily one of those companies, but from a company that didn't serve them well. And that's unfortunate, but that's why we do try to outline expectations and talk about what they're getting, and understanding the limits of insurance and the deductibles. That's really the key when choosing the right policy for you.
In this market, kind of on that same replacement value or fire, same example of the fire. I thought about this the other day. How often would you recommend somebody getting or talking to their agent about, okay, what is my replacement cost this year or next year? Would you recommend it? Hey, let's redo this thing every year, not just renew it? Because the last 7 years, home prices have gone up and up and up and up and up, right?
Yeah, most companies are adjusting for that.
Okay, automatically?
Yeah. Or some will add what they call inflation guard, or
okay.
Some will just do let's say a cost of living type increase each year. Because what you don't, from a broker standpoint, is you don't want to have a customer for 20 years and look back and realize that they're, way underinsured, right?
Yeah,
because you could get from an E&O standpoint, from a professional liability standpoint, we can get in hot water for not being aware of that, right?
Right.
So typically the insurance companies back us up a little bit, and they'll go ahead and bump it each year.
Right.
They'll do that with your jewelry schedule. They'll do it with the limits of insurance typically as well. So, but it's something that not every company does that you do want to pay attention to.
So what about if there's a house in this neighborhood that sold for $480,000 in, I think, November, right? Well, they were flipping it. And so I understand that you're going to say, well, the insurance company did their own value for this house, and maybe their value wasn't $480,000, right? It might have been higher, might have been less, who knows? But they flipped it, and now they're putting it on the market for $780,000. So theoretically, if that house burns down today, right, and they've put all this money into it, and let's say it's $550,000 replacement value, like, what happens, like in the short-term insurance, since they did those improvements, should they go to their insurance company and say, hey, I need this thing reappraised because I just put $150,000 into it, and I think that the replacement value is a little off? Yeah,
communication is obviously key, and that's one thing that I do. Obviously, I'm totally biased, but if I was insuring your home, you would call me and we would have that conversation. You're not going to call some call center overseas or something like that. You're going to have a real conversation with us about that. But yeah, you only know, the agent or broker or whatever you want to call yourself only knows what the client tells them, right? Because we're not going to go out and inspect every home or anything like that. That's just not how it works. So yeah, being in communication with your agent is really important, letting them know what's going on, if there's anything material that's changed. But on the flip side of that, if you get a new roof or you make improvements or you add solar screens or solar panels or something like that, you want them to know that too, because sometimes they can make an adjustment on the down end of things from a premium standpoint. Right. You might get credits here or there. So just being in communication with your agent. But the most important thing is trusting them to do their job. You got to find a broker that you trust, and then let them make suggestions. At the end of the day, we work for you, and you get the final say, but it's important for you to be on the same page with that broker.
Right. So in kind of summarizing, like, things to look for, right? Obviously, from a homeowner standpoint, and we're not really touching on auto because that's not really what I do, but I know there's a home and auto discount or, whatever, if you combine them. But things to look at home-wise: replacement value, deductibles, do you throw in like, and I don't know the terminology for it, but like your inner workings of the house, meaning like I've got this $5,000 podcast set up right now.
Yep.
My insurance company has no idea about it. Like, is that something that you
Yeah.
say, hey, like you kind of outline, because you hear hey, take pictures of all your interior stuff so that way the insurance company knows. Is that a real thing, or do insurance companies just kind of say, these are our numbers that we have kind of go off. This is the average, so this is what we're going to give you.
No, they will make adjustment based on betterments and improvements in the home. You know, if you have some high end finishing, that sort of thing, you know, you want to talk to the broker about that. If you have no different than jewelry, John, you're talking about this audio equipment. You know, you would schedule your wife's engagement ring because there's value there, and if you know, and when you actually schedule it, basically what scheduling means is you're putting them specifically on the policy.
Right.
Typically, when you do that, you know that your stuff is covered, but you're also not typically subject to a deductible when you schedule them separately.
Okay.
And typically there's a pretty quick replacement cost check that's cut. And the difference in replacement cost versus actual cash value, I'll go back and we'll touch on that.
Yeah.
Obviously, you want to always make sure that your home is the limit is based on a replacement cost of that home, because actual cash value is going to depreciate the home. Or to give you an example of a roof, if you got a 20-year-old roof, a new one might cost you $20,000, but if your policy was on an actual cash value form, they might only give you $5,000 because they've depreciated that.
Yeah.
That's a cheap way to buy a policy.
Right. But do they do that now?
Sure.
Okay, so let's touch base on roof, because being in Texas, that's probably the biggest claim I come across of. And when I say biggest, like
and
happens all the time. And so the first thing people look at whenever they're talking insurance or whatnot, or the house, the big ticket items, one of the first things is the roof. We always stand back in front of the house and look at the roof like we're actually inspecting it, right? Like you can tell sometimes it's wavy, sometimes it looks good. If you can tell that there's hail damage from down below, then it's probably in pretty dang bad shape, right? But most of the time you're like, I don't know. We'll get the inspector to come take a look at it, and he'll get a close inspection on it. But how has that changed? How has the roofing world changed? Or maybe it hasn't changed, but I feel like there's been some adjustments as far as how insurance companies have handled it from 5 years ago, 10 years ago to now, or is it not changed?
There's been some change
because there's been so many claims.
Well, that's why your premiums are going up every year, right? And the market. This is the first time in 15 years that you've seen a hardening market from a property and auto standpoint. So if we're talking about personal insurance, your home and your vehicles, expect increases the next 5 years. You're going to get it every single year.
Yeah.
Because you pay $4,000 for a homeowner's policy and they replace a $40,000 roof. It's not a good deal for the insurance company. And everybody thinks the insurance companies are making it rich.
Yeah.
But the last few years they have not when it comes to auto and property. And what they realize is they have to charge more.
Yeah.
And
I'll say this. I agree. You see all these roofs going up every single year, and I'm like,
and do they really need to be replaced?
That's the thing, man. I don't know. A lot of times I know that you get the roofer that knocks on your door, say, hey, I just replaced your neighbor's roof, like let me take a look at your roof. Nothing against that type of business, right? But he's out there hustling. I got to respect some sort of thing. But then they also have the ones that are like not doing things the right way. And it's an interesting thing how the roofer starts it, then the adjuster gets involved, and the adjuster, like sometimes it's somebody one that's lenient, and then you get the roof that doesn't really need to be replaced, and the gutters that have a few dings on it that are thrown into the deal that don't really need to get replaced. And so in theory, if it's me, I'm like, awesome, new gutters, new roof, new whatever. But if enough people do that, does it drive up the price?
Absolutely.
Yeah.
There's a 100 cents in every dollar, right? And folks don't realize that if everybody in your neighborhood got a new roof because of a hailstorm, I got news for you. The premiums are going up next year. That's just it's just basic economics.
Yeah.
I think, but that shouldn't deter you for filing a claim. If you need a new roof, you buy insurance to have that protection, right? Another thing that's confusing for a lot of people too is they might buy a policy that says that we're valuing the home at this and we're going to do it on a replacement cost basis, but when you do have a claim, they might only give you a check for the actual cash value until you actually do replace the roof, and then they'll give you some more money. And a lot of folks feel like they're getting nickeled and dimed a little bit when they do that. Some of the higher end carriers, you know, your Chubb, Nationwide's private client group, that is, AIG's private client group, companies that we represent, for instance.
Right.
They'll come out and just stroke your replacement cost check on site sometimes, and you're done. Yeah. A lot of times what happens with most policies is you get, you know, on a $20,000 roof, you might get $10,000 up front, and then the roofer is trying to go back and get more money. You're trying to go back and get the depreciation checks for you to be made whole, and it can end up being a frustrating process for people. They don't get the money that they feel like they deserved on the front end. They might have to come out of pocket a little bit to float some work being done until the insurance company reimburses them. So those are questions that you want to ask your broker when you're buying a policy is, you know, go through some claim scenarios. If this happens, how's this policy going to respond?
Right.
And the agent better know.
Right.
You know, if they, you know, trip and fall when you ask them claims questions, they're probably not the right one. And by the way, hire your roofer just like you're going to hire your broker. Hire somebody that you know and trust that's got your best interest in mind. You know, if I was selling insurance door to door, you probably shouldn't buy from me.
Right.
You know, you might buy from me because you know me, you trust me, you think I'm decent at my job. Do the same with a roofer. Hire someone that maybe you've heard of. Maybe they have their own crews and you know, they're not just dragging in day laborers.
Yeah.
And when there's a big hailstorm, especially in North Texas like we get every 3 or 4 years, you don't realize that a lot of these folks will come in from out of state. So if they've got an out of state phone number, maybe that's a red flag.
Yeah.
You'd like to know that they have an office and a warehouse near where you live, because typically if they're a local roofer, they have a reputation. They want to do things the right way. But if they drove in from Baton Rouge, and that's a shot to my LSU friends, which is funny. I'm using this as a real example because we got banged up pretty good a few years ago, and we had roofers, you know, calling on us. And there was a guy from Baton Rouge, and I'm like, "What are you doing here?" He's like, "Man, I'm chasing the storm, baby."
Money,
And that is good for him. He probably made a lot of money, but I'm not going to buy from him because you know what? When that storm damage is fixed, he's gone, and he's 8 hours away. And if I had a little leak, he's not just going to pop over and fix it like one of my local guys would.
For sure.
So pay attention to who you're buying your insurance from, but pay attention to who's doing the work in your home too.
Yeah, no doubt about that. All right, so just kind of overarching again, any other tips that off the top of your head? Because I want to get to your business and how it's built or how it was built and whatnot. So anything else from a homeowner standpoint that you're like, man, I need all my clients to know this, or this is something that I touch base with everybody. And so, because I know there's the things like how far do you live from work, you know, like little discounts that you can get here or there, which are very important. But there's also things in my mind that like can cost you money. Like, for example, and not to belabor this point, but when we had a tornado in Rowlett a few years back, I think it was 2017.
Bad one.
Yeah, bad one. Well, I had several friends that they reached out to me and said, hey, you know, insurance, this and that. Like, what do you think? I'm like, first of all, I'm like, well, I really don't know a lot about it, right? So I'm probably not the best person to give you the advice. But then they found out that instead of a 1% roof deductible, they had a 3% roof deductible. And on a $3,000 house, all of a sudden you're paying $9,000 for the roof when the roof is really only a $6,000 roof. Yeah, no, it's like, okay, this is not.
It happens a lot.
You know, and so, like, how do you, just give me one more tip on how you avoid those type things. Is it really just calling your advisor, you know, once a year saying, hey, can we run over this policy again?
Yeah, well, they bought that policy on price, right? That I can't stress that enough. And it doesn't mean if you're buying it from our firm or somebody else, don't buy just the cheapest deal.
Right.
You know, when have you bought the cheapest deal anywhere in your house and it actually worked out really, really well? Yeah. I don't care if it's a football or a tree. You know, if you get a cheap one, it typically just doesn't work out. So don't buy it just on price, because typically there's a reason. You know, I've got a buddy of mine that actually saw this weekend, and he told me about an insurance company that his neighbors were buying from, and this guy lives in a nice house, $1 million probably, and all his neighbors were saving money from, some company I'd never heard of. And I said, man, I've never heard of that insurance company. I've done this for a little while.
Right.
Something's too good to be true. They had $1,000 flat deductible, even including on wind and hail, and it was like $2,000 cheaper than what he was paying with Nationwide's private client group.
Right.
Well, the irony in all this is that I said, man, that's not sustainable. It's just not.
Right.
You can't have $1 million house and pay $2,500 in a $1,000 deductible. It doesn't work. Well, guess what? Last week, a couple of his buddies called me and said, hey, man, Derek told me that this was going to happen. And it did. And now they're all getting us to quote it because guess what happened? All their premiums went up. I mean, to the tune of a couple grand a year.
Right.
It was too good to be true. So if it feels too good to be true, it probably is. Yeah. And look that agent or that advisor or broker in the eye and ask them, why is this so cheap? Because I've got multiple quotes. And the benefit of being a broker like we are, we represent 20 different regional and national insurance companies on the personal line side, is that you hire us. Just hire me. I'm the guy you want to do business with, and we're going to bring you a couple of our best options that are kind of tailor fit for you. If you're a direct writer and you only represent one insurance company, well, guess what? You're going to get one quote from the only insurance company they can make money on. So to me, the brokerage model is pretty obvious.
That's why I couldn't agree more. That's not to say that Allstate or State Farm couldn't bring you something that like is a good deal and solid coverage, but like there, if you just go to them and you don't go to somebody else or a brokerage house like you don't know, right? Like that's just what it is. And there's a lot of times where I look at my client's insurance, because you got to pay some upfront insurance at closing.
Right.
And I'm wishing that I had either asked them, been more deliberate and asking them about their insurance, because a lot of times that does get handled between the lender and them. And I don't see that.
And the lender might have their favorites too.
Right, for sure. And so I'm like, dang, that's high, right? For what? And maybe it is because of certain reasons, credit scores, whatever, which I don't know how much that plays a factor, but it does,
it
right?
does, yeah.
So maybe there's reasons behind that, but like I'm all for just going out and shop, like you said, just shopping a little bit or shopping within one company, I guess.
Yeah, if you go to a brokerage, then you let that one person go do the shopping for you. You don't want to call 3 different agents. And by the way, if you called me and said, hey, man, I've already called 2 other guys, I'm going to say, man, they sound great.
Yeah, right.
You know what I mean? Like, go for it.
Yeah,
because if we've got a 33% chance of winning the deal, it doesn't really look great typically.
Right.
I'll just ask people to let me do my job. This is what we do. We represent a lot of really, really good companies, and that usually works out. So find somebody that you trust to do the work, and trust them to do it, and just let them go. That's with everything, whether you're putting hardwoods in or a new roof or buying insurance or going to a CPA. Just do business with people that you trust, and it'll be okay, even if it means a couple $100 extra bucks.
So something interesting that I come across quite a bit is, and then we're going to transfer into your business. But
that's all right.
So I've built my business on doing business with people that I know, right? Like that's been my core business.
Yeah.
And there's sometimes, and
it's got its struggles sometimes.
Well, absolutely. Well, the stress is heightened,
Sure.
right? I mean, there's no doubt about that. You want to perform better for people that you know, and not that you don't want to perform for everybody, but like there's another level of pressure, and sometimes it doesn't work out, and so that's not awesome when that happens. And I've never had anything catastrophic by any means, but it's been things like where you don't get a house, put in an offer, they really want the house and they don't get it, whatever, stuff like that. But then there's also times where, and I completely understand this, where friends don't want to do business with friends. Do you come across that much?
Yeah, no, definitely, especially when you're talking about somebody's home.
Yeah.
Or we have a benefits practice.
Hey, what's your
too.
credit score? People are like, oh.
Yeah, well, and here's a hint or maybe just a statement. Don't be surprised when that broker asks you for your social security number, your driver's license number, your date of birth, your full name.
Yeah.
Because they're going to do an insurance inquiry into your credit. It's not a hard credit pull. It's not going to affect it, but they want to see if you can pay your bills.
Yeah.
And premiums sometimes are going to be based on that. Maybe the age of the home, maybe the age of the roof, maybe something to do with the wiring. So a 1950s house is going to be a lot more expensive than a brand new 2020 new build, even at the same limit.
Right.
So not everything is the same. There's a lot of variables in how they come up with price. It could be on you. It could be previous claims history that you had at another home.
Right.
And people really get thrown off by that. So you're going to have to give them your social security number.
Yeah.
And you mentioned
the friend side of things.
Oh, and the friend side of things, it is hard, especially whether it's real estate or insurance. The low-hanging fruit in your first couple of years is calling all your friends and family and that sort of thing. And then after 10 years, you maybe say, oh, I don't know that I want to.
Yeah, right.
It's certainly a lot more sensitive. If somebody does have a bad experience or a claim or something like that, the spotlight's on you for sure.
Yeah, no doubt.
It's a good practice to not do too much business maybe with friends, but looking back, that's what I've done though.
But here's the thing, like I think that you owe it to your friends, right? Like in a way, I think I'm going to give you the best value possible, right? And I don't necessarily mean value as far as money. Yeah. I mean like time, right? Because there's a lot of times where I'm fielding phone calls or text messages at 8, 9, 10, 11, 12. They text me at 2 o'clock in the morning. If I'm up, I'll probably answer. If I'm not up, obviously I won't. But so try and do that with like, in my world, like a Redfin agent.
Right, exactly.
They're not going to respond to you in that.
Yeah.
So in a way, I think, hey, it's good, but there is some awkward conversations sometimes that happen, but you just don't make it awkward.
I don't practice what I preach. I mean, on paper, you would love to get all your business from people that you're not totally connected with, right? That makes you feel like there's not as much pressure.
Yeah, right.
That said, if you looked at my book of personal clients, it's business owners that I insure, and then it's my friends.
Yeah, right.
If you call me and said, man, I think I'm getting a bad deal or I'm buying a house, will you look at this? Then I'm going to do it because you want to do business with me because you trust me.
Right.
Even though in the back of my head, I might be thinking, man, I don't want a whole book of all my buddies.
Right.
But that's my job, and that's
well,
what
and I
do,
will say
right?
this. I mean, you carried my insurance for, I don't know, 5 years or something like that with the whole place. And I mean, that was a very real conversation that we had. I feel like it was like, hey, like it's not, I love doing business with friends and that sort of thing, but like, I want you to get the best deal. I want you to understand, like,
we get beat sometimes too, right. And that's okay.
Yeah, right. And so it's one of those things where he's not lying. You're not lying. Like, you're going to give the honest assessment as far as the situation, and I think that's why I feel like the call is going to be to you, or the call is going to be to me from your friends a lot of times, because I need some insight here. I don't want to go buy a car from some guy that I have no clue, because he's going to do this, and this. I want to know somebody in the business. And so that's why I tend to, in any business, like, try and call somebody that I know or have done business with before.
You feel like you can be more transparent with somebody that you know as well.
Look, my credit's not that great, man. Like, I know you're going to find some stuff. Like, I would rather tell you that than some stranger. Now, some people are opposite about that, But anyways, let's get to your business, because this is what I'm fascinated by. This is going to be the selfish side of things, because you now, in my mind, have, and I don't know anything about like the books or anything like that of your business, but in my mind, surface level, look at your website. I count 33 employees, been with BSBD for 11 plus years. Like, that's impressive, especially younger than 40, right? Well, you're 38. Yeah. So 38 years old, 33 employees. That's awesome. Right. But I know it's not as easy as it looks from the outside. Right. In 2020, I feel like I do a lot of YouTubing and people that, influencers and stuff like that, to where people are preaching one of two things. Either this is going to be easy money and entrepreneurship, you're going to be free, right? And you're not going to have any responsibilities. You're going to hire people to do everything for you, and it's going to be great. But then you also have the people that are like, this is a grind. If you're not grinding, then you're not going to make it. You're going to burn out, whatever. I'm obsessed with trying to like figure that out, right? Like, okay, I want to be on the beach 6 months out of the year at some point, right? Okay, but how is that going to work, right? It's not just going to magically appear, right? So in my mind, 38 with a business the size of your business, which is a small to medium sized business, but you've accomplished a lot. So how did you get there? Like, whenever you started with BSBD 11 years ago, like, what was it like? Did you know what you were getting into?
No, and that was probably the biggest blessing that there was. So I worked for a gentleman that owned an insurance company for 4 to 5 years before I joined Mike and Tim, Mike being my father. Tim Shackelford is a guy that I've known almost my whole life. He was a partner at the PV Insurance Agency in Garland.
Yep.
So it was them too. I certainly can't take all the credit.
Where was it whenever?
So when I joined them, they were in Garland. They were actually at the Firewheel Mall. It was Firewheel Insurance Agency.
Yep.
It was them two, and they had one account manager, so 3 people. And this is May of 2009.
Right.
We're there for a couple years, and then in June of 2011, we teamed up with Don and David Barnett. Don has since retired, and David is still one of my partners in the firm. And so there were 9 of us. So yeah, in 2011, this is in June of 2011, a relationship that Mike and Tim had with Don and David Barnett, their father and son, and they had 2 account managers, basically servicers, that came with them, and we had 9 people in 2011. And since I think we have 35 actually 35, now. I think we've added 2 in the last couple of weeks, which is exciting. New people always bring new energy.
No doubt.
So we've grown at a nice clip. Really, really proud of that. We've done it, on paper pretty quickly, but we've done it methodically. We've done a good job of growing with the right people. We haven't had a ton of turnover. Every once in a while, people don't work.
Right.
But the barrier to entry in the insurance business, touching on a previous topic, is the first few years, right? So the people that are going to make a lot of money in our business are the ones that take care of their clients, right, and do it the right way, but that can recruit and retain talent.
Right.
That's the hardest thing going right now in our industry, is bringing in new talent to perpetuate the business. Anytime you've heard me talk about this or seen something that I've said, the insurance business has looked the same way for a long, long time, and we're going to be a part of changing that.
Right.
That's kind of what I tell people. We're going to be more energetic, more collaborative. I told Brooke, who I mentioned to you earlier, as our kind of marketing person. She's newer to the business, and the way I explained it was, we want to be an energetic and collaborative group.
Right.
And I think that's what sets us apart. When you walk into our office, you see a lot of smiling faces. You see a lot of people spending time with each other, talking about, how do I handle this situation, or how can I go prospect this deal? And there's a really big synergy in our group, and I think that's really electric. I think that's why we've grown as fast as we have.
Who sets that tone? Like, are you the believer that it comes from you, or are you like, hey, I need to put people in place that are going to help with that?
Both, right? I'm certainly going to be the tone setter.
Yeah.
I'm gonna set the tone, but we certainly want to empower people to do certain jobs, right? We've got a couple 3 finance people that they know their role, and that's not mine. We've got a lady with a lot of experience that manages the account management staff, so the whole service side of our business, she handles that. And then I can kind of take a step back and kind of, get 100-foot view of all of it. And I think I do set the tone from an energy standpoint. There's not a lot of, young leaders that look like me in this business, and I think a lot of people respond to that.
Right.
And some people maybe don't, and
right.
That's okay. But I think what this industry needs is people to come in and be creative, embrace technology, embrace this younger generation too that is maybe getting a bad rap. The folks that can turn an old industry into a current one are the ones that are going to really sustain during all these next 10, 20, 30 years, because the world is changing.
Yeah. And
the insurance business, although it doesn't move as quickly as a lot of the other ones, it's going to start changing as well. And so we're going to do our best job to have a collaborative, diverse workforce of people that just want to do business the right way.
Do you see your business having to compete with like things like Lemonade? You familiar with that?
Yeah.
Do you think that
No.
Or like, do you want to? No, you don't.
No.
So you're not talking about joining that. You're talking about changing the business, but not quite going like to where it's no personal touch whatsoever.
No, and when I talk about changing the business, I'm talking about it culturally.
Yeah.
I mean, it looks and feels different in our office than it does in a lot of others.
Yeah.
When you talk about a company like Lemonade, it's really a technology company, right?
Right. Yeah.
But their
100%.
target client is very, very different than ours. No different than the direct writer. Those are volume games.
Yeah.
If somebody that has assets wants to protect them, they're still going to come sit down with me or one of our other, advisors in our office because they don't trust an app, with their $1 million house and their cars and jewelry and things like that. So, we're okay. We're okay with that.
Yeah.
That's a different model. And back to what I said is if you're that, then you're not BSBD.
Right.
And that's all right.
Yeah, right.
So when we have that conversation on the front end is what are you looking for? Are you looking for somebody that's got your back, somebody that you can sit down with, somebody that you can have these conversations with and it be the same person every time? If you value that, then our model probably works really, really good for you.
Right.
If it needs to be really fast and really cheap, then we're not that.
Right.
We're nimble enough that we can do things quickly. But I mean, from a mindset standpoint, if you're willing to buy insurance on an app, then you're not a great prospect for us.
Right.
And we're okay with that.
Right. And that is one of the things where I feel like in my real estate world, there's a lot of that right now.
TurboTax versus going and sitting down with a CPA.
Absolutely.
Right?
It's across the board. You're
No
right.
doubt.
It's not just real estate, but you have a lot of, we call them discount brokers or, whatever. Hey, I'll just put it on the MLS. And so if you need to only spend $1,000 to sell your house, then okay, there's an option for you. But just know you're probably going to be doing the negotiating yourself or, whatever. And so, but I've gone back and forth on if that's going to be the way in my world. I do think that there will always be a real estate agent, somebody like myself, but I think that the numbers will shrink dramatically because when you start thinking about, every discount broker out there does 5 deals a year when there used to be no discount brokers at all, and there's a ton of them now. That's a lot of deals that get eaten up, and so the cream has to rise to the top ultimately. Like the top ones have to.
And that's going to deter some people from getting in the business,
which is fine with me. Like that,
Right.
That is totally fine with me. But anyhow, so about your business, are you a goal guy? Like, do you set goals for yourself and for the company? Hey, in 5 years, I want us to be here, or in this year, like short term, long term. Like, do you do that stuff?
Yeah, and
Maybe not formally, but
So I'm a pretty informal guy.
yeah, right.
I'm about getting in front of people, letting them know what you do, doing it the right way, and then the money kind of takes care of itself. That's really personally that's my model.
Right.
I've spent a lot of time with different consultants around the country, and I'm still learning, trying to be a leader and trying to understand our business as best we can. And they all want that. They all want guys like me to be able to put a plan on paper. I'm not a plan on paper guy, but I'm doing my best.
Yeah, right.
I think some people need goals. I think there's brokers in our office that need goals and need that from an accountability standpoint. And there's some folks that they need a lot of leash and they just need to be left alone, right?
Yeah,
so
right.
I don't think there's one way of doing it, not even in our office. I think if everybody's doing it the right way, there's more than one right way. So we have some goals. I'll tell you, it's a really fluid world in insurance right now, especially for us.
Are you talking 2020 with everything going on? Or are you talking about?
Actually before that. I mean, you don't know. I can't sit here and say, all right, we're going to hire 3 new people a year and it work out that way. We're going to hire 7 one year. We're going to hire 1 the next year.
Yeah.
It's just so hard to predict because we're not just trying to put butts in seats. We're trying to bring the right people in at the right time.
Right.
And so this year we've added 5 new employees in the last 6 weeks.
Which is
good. Hey, good and bad. I think it's a testament to this industry as a whole. We've come a long way in that we can work remotely very efficiently.
Right.
But yeah, we added people in the middle of a global pandemic, right?
Yeah.
So that's a good business. I think looking from the outside in, you'd say, wow, that's a sustainable business. The way that we're doing it looks really good for the future. We're not worried about the small tech company type thing. That's just not what we do. So,
right.
we're still adding people. We're going to continue to grow. And now that we've got enough people and enough boots on the ground, not that it's easy, from a recruiting and growing standpoint, but it is. There's a lot more flow, deal flow from a recruiting standpoint. Right. An opportunity standpoint. The larger we get, the easier that gets a little bit.
What about some of the challenges with the larger you get, the harder it gets?
Yeah.
And from a standpoint of people are your greatest asset, but they're also your biggest liability, right? Like you have more people to say something stupid. You have more people that are going to call in sick. You have more people that like more problems are going to arise, more conversations about, hey, I'm not being compensated well. So talk about those challenges that you come across.
I've been able to see a lot in my short career. Right. I'm a newer, younger person in a leadership role. Mm-hmm. I'm a lot better today than I was last year and the year before that and the year before that. And sometimes I've had to learn from making mistakes.
No doubt.
It is difficult. And I'll tell you, you get to there's certain milestones where you get big enough, you need to hire another accounting person, or you get big enough and you maybe need to hire a higher level account executive type or an operations person. I felt like the springboard year for us was about 2 years ago. We maybe had, 20 to 23 or 4 people, and we were big enough and had enough going on that my partners and I kind of sat down and said, all right, what's this look like the next couple of years?
Yeah.
Because at first when you start a business, it's the owners of the business that are doing everything. Taking the trash out, fixing paint chips on walls, fixing computers, right? Yeah. And I'm glad we've gone really fast the last couple of years, so it's been a little bit of a blur, but it's been a lot of hard work. Mm-hmm. We've found the right people and got fortunate with some of the timing and added some really bright finance minds and a lady that is a total stud workhorse from an operations standpoint. That takes a lot of pressure off of me.
Right.
And allows me to go do the things that I'm good at, whether that's networking or doing stuff like this and spreading the word and talking to our insurance companies. And then recently we hired a guy that's a absolute expert in the safety world, which is a value add for our clients. Mm-hmm. He's going to bring some deals in and we've got another thing to do there. We also realize that being a broker, we represent a lot of companies, and all those companies want their voices to be heard. They want to come see you. They want to talk to you. They want you to send them business instead of their competitors. And so we hired somebody else recently, a few weeks ago, that's going to really take that role on. I've been pulled in a lot of different directions the last couple of years, so have some of my partners at times. But we're putting people in place to allow everybody to do what they're good at, right?
Right.
I certainly understand my weaknesses, and I'm doing my best to plug those holes with key personnel. So we're in a really good spot now from an operations, from a finance standpoint, from a marketing standpoint. I feel like we're actually ready to really go.
That's awesome.
And from a velocity standpoint or a growth standpoint or whatever you want to call it, it's looked good to now, but I think now we've got a platform. And I want to touch real quick on not putting too much attention on myself. When I joined Mike and Tim, they were small and new, and they had left another firm, but there was a platform for me and some of the other guys too to build on. We had some carrier relationships, we had a management system, we had office space, so I don't get any credit for that.
Right.
They deserve it, and they have, along with the Barnetts, great reputations in our business as well, which is absolutely key. So I'm good at some things, I'm weak in some things, but we're filling those holes, and we've got a good group of veterans too that have done it the right way for a long, long time. And so they deserve a lot of credit. Now it's up to me to kind of just, fire this thing up and
carry
get after
that torch and keep on going.
No doubt.
So you talked about talent. How do you find it? Like, where do you find it from?
So, we're probably a little different, and we're spoiled in the sense that we haven't utilized a recruiter for one producer. We do that sometimes on the sales side of things. Okay. I think the bigger we get, the easier it gets to recruit.
Yeah.
More people know who we are. There's a lot of private equity and bank-owned shops and things like that are growing through acquisition right now in the insurance business. And so agencies like ours are just getting gobbled up. Right. And there are fewer independent firms at our size or bigger, that 20 to 100 employee firm, there's a handful in DFW these days.
Oh, really?
And that's it. And we like that.
Yeah.
And there's going to be even less.
Mm-hmm.
So the opportunity for us is to fill a space that has kind of been taken out. That true mid-market super regional broker, that's what we are.
The one that, again, cares about the customer that calls in, right? Like,
we like to play both sides of that. We can compete against the big boys because of this, and this, but we can also take business or bring value to some of the smaller deals too.
Yeah.
So we want to stay as versatile as possible, and growth is good as long as it doesn't change your culture and your model.
Yeah.
And we're doing our best to remain independent. This thing is not for sale. Guys like me want to do this for a while. So
yeah, right. I was going to ask that,
we have a lot of
if there's like an
opportunities.
end game to this whole thing. Like, I mean, I'm sure you think about it, right? But I mean, if it's something that has crept in your mind more and more and more, or if it's
No doubt. There's a lot of dollars out there.
Yeah.
But I will tell you, we've spent a lot of those dollars with consultants to help us put together a perpetuation plan. We've got it on paper. We're doing what we said we're going to do to remain independent, and we feel like that we can do that. Perpetuate equity internally. You obviously you don't make as much money doing it that way, but man, the lifestyle and the freedom in this business is incredible once you've gotten over that barrier,
right.
that 3 to 5 to sometimes 10-year mark from a production standpoint of having a solid book of clients that you can build on. The first few years are the main reason that a lot of people don't get into insurance is it's a heavy commission business, similar, not quite to the point where yours is, but.
What do you mean by that?
Well, yours is, we live in this.
You can say whatever.
We live in this residual commission world, which is different.
Right.
You sell me a house, and
I get one lump.
I might not need you maybe ever again.
Right.
Whereas if I sell you an insurance policy, I get to go sell it to you again next year, and then the next year, and then next year.
Right.
So,
which is huge.
Yeah, it's great.
I mean, that's
it's great. I've never really understood why more people weren't interested in the insurance business, because it's a great model.
I sometimes think, like, whenever I'm doing one deal after another, and I have to start over every time, like, dude, what am I doing?
Yeah, you have to stay
right?
active.
Yeah,
right?
no doubt.
You have to have a certain energy, and you have to stay active in your world, especially. But you can have a little snowball effect in our business, which is really attractive.
Yeah, for sure. How has this stuff going on right now affected you? COVID.
So it's affected us.
And even two-part question. Even like
the clients too.
The clients, and like in your in-house.
So essentially, our staff works remote a day a week anyway.
Yeah.
We just
before this.
Yeah, and we remodeled our office 6 or 8 months ago too, and we were out of it for about 8 weeks, I'm guessing. So we actually kind of had a trial run. The beauty of it is we've got a bunch of stuff that I don't understand. Fancy phone systems that allow you to look like you're working in the office and it's coming to your cell phone, and computers that allow you to work remotely and really efficiently too. So from a service standpoint, we really haven't seen much change in our abilities. With the COVID stuff, we've run in on the commercial side with a lot of business disruption.
Your restaurant owner was going, having a tough time.
And there's a lot going on that we won't dig all the way into.
For sure.
But a lot of these business interruption type claims that have come in that aren't being paid because of how these policies are built. Right or wrong, there's a lot of people that thought maybe they were buying insurance that would cover them for something like this, and it's not.
Yeah, right.
So we feel that our fair share of calls and had to work on behalf of our client to try to get them what they deserve at times. But from an office standpoint, we've got a handful of people that are still in the office. But for our clients, it's changed a lot of their business models. Some of them have had to pivot and go in different directions due to what's going on and change their business model a little bit. So the benefit of being our size and not this monster shop is that we can still be pretty nimble. Yeah. If you're a national broker and you've got 10,000 employees, man, it's hard to make changes.
Yeah.
When you're talking about getting rid of offices or people working from home, you're making big decisions on the behalf of a lot of employees and probably some shareholders and things like that too. So it's hard. Having 30-something people is hard. You're making decisions on behalf of that, that amount of folks.
Right.
And everybody's situation right now is really, really different. So we're trying to be sensitive to that. We're trying to ease back in. But at the same time, we realize that there's, working parents that are at home that have their kids because the summer program was canceled or the daycare's not open. And it's been really challenging from that standpoint. Everybody wants somebody like me to make the right decision for everybody. And honestly, it just doesn't exist. So we're going to do our best to make decisions. But we're still, for the most part, working remote right now.
Yeah. So do you envision, because I think the personal opinion, I feel like commercial real estate could take a hit here in the next 5 years, just because people have, you maybe realized it a little bit whenever you remodeled your office.
Sure.
Oh, like you can work from home and it's not as big of an issue as maybe we had thought. Mm-hmm. And now there's a lot of, man, we're forced to not be at the office, and it's actually worked out.
Yeah.
And so, like, where do you see that type of thing? Like, could you envision that? Answer it, don't answer it, whatever. Like, could you envision a time where you're staying home like 5 days a week, or you're working from home?
Me, no. Yeah. A lot of the salespeople, need an office. They want to be able to have conversations behind a door. Mm-hmm. For any of our service staff that sees this or hears me talking about it, I think a lot of them like to work from home.
Yeah, right.
It saves time. There's more time in the day when you don't have to get ready and do all that stuff. Yeah. So I think eventually we're going to have to adapt to that. Mm-hmm. We've got 2 offices. Our primary one is at Granite Park and almost Frisco, Northwest Plano. That's where I'm at. And it's not getting cheaper. Yeah. And we've got an office in Turtle Creek too. And those
sorry to interrupt.
No, come on.
I'm shocked by the price of office space. It's it's a huge expense for businesses.
What's wild is we probably pay $15 a foot more in Granite Park than we do in
Turtle Creek,
uptown Turtle Creek.
Yeah, no joke.
It is expensive. And so that's the balance, right? Yeah. When you're creating a budget, our office is nice, and it's got a restaurant on the bottom and covered parking, and
Grand
there's
Park's
a gym
nice place,
and that sort of thing. Mm-hmm. And then you look at the dollars, and it's really expensive. So having an ownership group that's on the same page is really, really important. Yeah. And my partners have empowered me to make some decisions. Yeah. Which was good, which is a really, really, really important. But we're gonna have this office for a while. When we redid it a few months ago, we signed a new 5-year lease, and one of my closest buddies is a Cushman and Wakefield guy named Dean Collins, best power broker on earth, right? Yeah. That's hopefully he'll hear that. So he's a tenant rep.
We'll push this too.
Yeah, exactly. He's a tenant rep guy, and he's seen both sides of it, where he's actually had some folks talk about bigger spaces so they can keep people further away from each other. Right. And then he's seen some 100,000 square foot deals turn into 15,000 square foot deal because they realize we can work from home, and holy cow, look at the dollars, right? Right. So, I don't see us, for our firm, I would see us making an adjustment in our model before we're going to add office space, because we've had opportunities to expand. We're out of seats now. Yeah. We just expanded a couple different times in the last 5 years, and we've made a decision. We had an opportunity to take down some more space in Plano a couple months ago, and we felt like maybe it wasn't the right time. We didn't know what this whole thing was going to look like. Yeah. But I could see us maybe making an adjustment to our model when it comes to working from home and working in the office. Yeah, and I do think that it's an interesting thing that everybody kind of has to deal with on their own company or whatnot. But it's going to be fascinating over the next few years. Now, personally, I hope that it doesn't, because I mean the commercial space is a huge sector of the economy, and so if that goes down, then that's going to be a pretty tough look for everybody. It's going to have ripple effects across the board, and so I really don't want that. But I think that there's a possibility that. I think there's actually no doubt that some people are going to move out of their office space. We've seen insurance companies already pull the trigger on some offices where they realize they can have field reps and marketing people and underwriters work from home and go visit agents and that sort of thing, and they don't really need an office. So. Yeah. Man, where do you see yourself in
10, 15 years? I mean, you think, obviously BSBD, but like, well, maybe not obvious, but I would assume so based on what you said earlier. But like, is this something where it's like, man, I'm dreaming big and we're gonna make this thing like just one of the big dogs? Or is this something that's like, we're gonna get to a certain point and I'm gonna like feel really good about it and make an exit? And obviously, who knows, right? So we're playing some hypotheticals here. Yep. Anybody at BSBD, this isn't saying, whatever, but like, is their goal in mind? Like, hey, I want to do this until I'm 50 and then like, I'm cool, like doing some traveling and stuff like that.
Yes and yes. I think looking 10 years, 15 years, we want to continue to keep our head down.
Yeah, right.
I won't be able to do what I do and have the same energy for a long time, so I know that I need to go hard while I can.
Yeah.
But I think there is a point where you maybe don't want to go too big, because if you start losing that lifestyle, that culture, I've talked to guys that I know in the business that worked for firms that got in that 100 to 200 employee type space, and what they realized is they weren't doing anything better for their clients and they weren't making any more money at a certain point. So I think for me, I just got to do my best to have my ears open and listen to those stories and learn from other folks. But for now, we're going to go full blast as long as we can continue to service our clients and see where it takes us. But at some point there's a lot of dollars out there, and I think the biggest fear and probably the first question that I get when we're sitting down and interviewing somebody is, what does this look like? Are y'all going to sell in 3-4 years like everybody else?
Because I was going to say, is that like, so you mentioned that earlier, evidently that's like a big thing to where deal. Like, hey, I want to come to work for BSBD. I don't want to end up gobbled up by somebody else. Yeah. Is that, so that's real? Mm-hmm.
Yeah. Oh, it's totally real, to the point where guys want it in their contracts and things like that too. So there's a lot of opportunity, but I'll tell you, and this, man, it's really nice to work for yourself.
No doubt about it.
And so, and I'll give you a quick story about Mike and Tim when they started Firewheel Insurance in Garland. They had just left a bank-owned agency.
Yeah.
They were an independent firm and sold to a bank. And I think they had a pleasant experience, but after their employment contracts were up, they realized it just, for them, it wasn't as good as working for themselves. Right. And so I got to learn a lot through their experience too.
So, all right, we're going to wrap it up right there, my man. Hey, so one thing I want to say is, well, two things. One, I appreciate you coming out. The knowledge that you've given today about both the insurance side of things and the business side of things is awesome. It's eye-opening. It's going to help my clients. It's going to help people that don't know me, just random people hopefully out there that hear this or whatnot. And then the business side of things, which I'm really fascinated about. And it's really cool to hear how you've grown, how you've done it, the culture you're building. Man, it's awesome. So I appreciate you coming by and taking a chat.
Thank you. I always like telling the story. It's been fun, but it's been hard,
Yeah, for sure.
So I'm happy to share our story.
All right, Lucas Boyd, BSBD Insurance. Is that the website?
Yeah, bsbdgroup.com.
bsbdgroup.com. Check them out.
All right, thanks, guys.
Yep.